Welcome. This is the Investor's Edge podcast, everybody. I'm your host, Fred Stupart. We're here to share our long-term approach to compounding investment dollars. Join us as we discuss previous transactions and situations. As Eleanor Roosevelt implored, learn from the mistakes of others. You can't live long enough to make them all yourself. Welcome. I'm Fred Stupart. This is the Investor's Edge podcast. Thanks for joining. So today's episode, I want to talk about investing psychology, how to recognize world events or price volatility is starting to get the better of you and fear is overtaking your ability to think and to structure your thoughts rationally. So one of my first experiences with this sort of phenomenon was in the summer of 97, basically through till the fall of 98. There was an Asian currency credit crisis that became a Russian debt crisis. The Russian government defaulted on its debt. Long-term capital management failed. There's an excellent book written by Roger Lowenstein about that period. And ultimately, the Fed bailed everybody out, cut rates in the fall of 98, about 75 basis points. But over that period of time, I saw how market events and price volatility can overcome common sense. And so even if you owned assets that were not fundamentally being affected by this, if your funding source or your parent company was somehow being affected by these other events that were going on around, that could result in some fairly irrational behavior. So perhaps getting to an example that's more proximate to today, I was thinking back to the start of 2020 when COVID was breaking out. Why don't we just flip back to that period, see if we can kind of get our minds back into that time period.
Viral pneumonia has hit central China's Wuhan city. Authorities have reported 27 cases in total.
It's a new type of coronavirus.
A mystery virus they'd hoped to contain, but one we now know can jump from human to human.
It's one person coming in from China.
The city at the center of the outbreak in China and two others going on lockdown.
The risk is low in the United States.
At least 565 people are dead and more than 28,000 infected with coronavirus around the world, as if the Chinese are telling the truth.
On March 11th, it became real for the entire country.
COVID-19 can be characterized as a pandemic.
We are hearing that they're going to make an announcement soon that this game is not being played.
I had so little time to make that decision.
You could see right here the reaction from Mark Cuban.
This is crazy. This can't be true. I mean, it's not within the realm of possibilities. It seemed more like out of a movie than reality.
All of a sudden, what seemed so far away in China or in Europe was incredibly clear that it was here. And even if you didn't believe it, just looking around you, your world had changed forever.
Okay, well, that sets the stage for the main discussion piece of today's podcast, which is an interview that took place over CNBC in March of 2020, where you're seeing a great investor on air, real time, battling his emotional side and his rational side. So let's take a look.
I do right now, though, want to bring in Bill Ackman on the phone. He took to Twitter today to urge the president to take more dramatic measures to stop the spread of the virus. Bill, I thank you for joining us today.
Thank you, Scott.
How did it manifest today with these tweets and going public?
Well, maybe just a little bit of context. You know, I'm an optimist, but beginning in, late January, I was getting increasingly bearish, and I woke up with a nightmare. And you get to just massive numbers. I'm watching this thing roll out in China. It kills, 1 to 2% of the people. In China, the number's been closer to 4. People think that's because the health system's been overwhelmed. But 1 to 2% means friends and family are going to die. The concentration was, the effect were sort of older people with longer cardiac conditions. I have a father who's almost 81. And I think the fact it's sort of people press reports that it only killed old people, it only killed sick people. I think it made most of the country not particularly concerned. I think the fact that 99% of the people lived made most of the people not concerned. The fact that it was in China and it was like far away, and but it's not enough. And the reason why it's not enough is the only way what's going to happen if we continue the way we are operating is until a vaccine is manufactured, distributed, and injected, we will go through a depression-era period in the country, and millions of people will die around the globe, and as many as 1 million Americans are going to die.
Okay, so it's pretty scary numbers being thrown around there, but let's put them in context. So he referred to 1 to 2% of the population dying from COVID. 2% of the population would have been about 6.6 million people. I think the fact that he referred to 1 million deaths, but then he referred to 1 to 2% of the population, that logical inconsistency thing kind of speaks to the fact that he was kind of doing this on the fly, real time, and it just, in my mind at least, kind of substantiates the veracity and honesty of what he was going through at that period of time. Putting all these numbers in context, there was a study done in 2022 that went back and looked at the actual number of COVID-related deaths for the first 2 years, 2020 and 2021, and kind of ranked them against heart disease and cancers, other big killers of Americans. And here we go. It's from the National Cancer Institute. It's pretty interesting because it shows that during that period of time between 2020 and 2021, COVID was not the largest killer. About 700,000 deaths were attributed to COVID during that period of time. And in fact, 2.1 million deaths were attributed to strokes and heart disease and cancer. So COVID during that period of time was actually only the third leading cause of death in the United States. So it was a very, very emotional period. But at the time, it looks like, you know, some of the emotions were getting the better of us. But let's flip back into that interview again and see how it continues.
And it's just math. It's killing young people. It's killing healthy people, right? Assume it's going to kill your child. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties, down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. Every hotel is going to be shut down in the country. Every one.
Hang on.
Okay?
You say Hilton is going to zero? I mean...
Oh, no, again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done, okay, because no business can survive a period of 18 months without revenue, okay? And I've been super bearish, but I got bullish, okay? And the reason why I got bullish, and I've been aggressively buying stocks, including Hilton, today, okay, and I've been buying all the way down, Hilton, restaurant brands, Starbucks, you know, walk your way through our, the only stocks I'm not buying are companies who are on the board and I'm restricted. We got an invisible, silent, deadly enemy. Okay, how do we kill it? Everyone just goes home. You sit on the couch. Just stick with me for a second. You sit on the couch, you watch Netflix, you order in Chipotle, and you stay there for a month, and you spend time with your loved ones, okay? And the virus will die. And by the way, the country survives, the economy survives. If we do this, where just incrementally over time, until there's a vaccine, we're done, okay? And what will happen is, you know, the hotel industry and the restaurant industry will go bankrupt first. Boeing is, you know, on the brink, okay? Boeing will not survive without a government bailout. Airlines are going to stop flying, okay? An airline without revenues, okay, is toast, okay? And you can bridge the airline for, you know, a shorter period of time, okay? But you can't bridge it for years, okay? The airline industry goes bankrupt, the hotel industry goes bankrupt, the restaurant industry goes bankrupt, and by the way, private equity goes bankrupt, okay? Blackstone is a fabulous private equity firm, KKR, they do a tremendous job, but every one of their companies has a lot of leverage. Okay, every one of their companies goes bankrupt if this thing rolls out over 18 months.
And now I'm even more concerned than I was before, and yet he's buying stocks. So you must have a level of belief in you that we're going to do what you suggest and that we will emerge better on the other side.
Yes. Okay, because this is the only answer. But if we're in a long, drawn-out disaster where the airline industry goes bankrupt, every industry each month, okay, name a sector, it's toast.
But do you think, though, that we're working out some sort of bottom? You must, if you're willing to put money into the market with the views you have right now. I think Twitter is going to explode over the people saying he's talking like we're having the end of the world, and yet he's putting money into the stock market.
Okay, so I find that interview fascinating. I don't think I've seen too many real life examples of a great investor who, in front of everybody, sharing this conflict that he's having between his emotional, fearful, irrational side and his logical, analytic side. And the fact that despite all this, he's able to box out his emotions and rationally say, okay, however, I'm buying Starbucks, I'm buying Chipotle, I'm buying restaurant brands, I'm buying Hilton. There's a incredible upside opportunity here. Stocks have already heavily discounted over the last few weeks. I'm a credit guy, so I always think in terms of foreclosure frequencies and loss severities. And so it's kind of like, yeah, you've got an elevated foreclosure frequency probability because COVID is potentially going to shut down a lot of businesses. However, the stocks have already been hit. So there's a much reduced loss severity. In fact, there might be huge upside if the government and these countries can navigate this situation. So I find the whole thing fascinating. And I was immediately struck by, well, what does this remind me of? Immediately, and I'm sure a lot of other people out there are thinking the same thing. It's like Daniel Kahneman's System 1, System 2 approach to cognitive psychology. Kahneman actually won his Nobel Prize in economics. I don't think there is a Nobel Prize in psychology, but anyway, he wrote an amazing book for the general public called Thinking Fast and Thinking Slow. And in the book, he basically tries to explain human behavior in the terms of a System 1 and System 2 thinking. System 1 is that portion of the brain that's going to make a quick fight or flight decision based on a previous experience, some kind of pattern recognition, a heuristic, something like that. And given the fact that it's trying to do things quickly and not expend a huge amount of energy doing it, it's a little lazy, it often makes mistakes. And so that's the emotional side, I think, of that Ackman interview, where you're sort of immediately reacting to the input and letting it buffet you without, properly regulating it. System 2 is that portion of the brain that is going to naturally put a brake on that process and say, okay, we have to analyze the situation. We have to think about it. We have to find some more facts. And normally it's running sort of a low capacity utilization in the background, but then it's designed to sort of kick in and act as a filter, potential brake or accelerant, I guess. And I think that's the portion of the interview where, Ackman's telling us that, in fact, he's bullish on stocks. He's buying Hilton, Chipotle, restaurant brands, Starbucks, and that turned out to be the right move. And he did incredibly well from it. So why don't we just take a quick peek at what Kahneman himself has said about his two systems.
I'm going to tell you a riddle. Most of you are familiar with it. A bat and the ball together cost $1.10. The bat costs $1 more than the ball. And, of course, how much does the ball cost? How many people know this riddle? Oh, okay.
So for some reason, our brains are wired so that we kind of see that 10-cent number hanging out there, and we get lazy and we just kind of throw it out and say, the ball's 10 cents. But, of course, 10 cents plus $1.10, that's supposed to be $1 more than the ball. $1.20. Together, they're supposed to be $1.10. Obviously, that's not the right answer. So it's a system of two equations and two unknowns, but for some reason he's devised the question so that we all kind of get it wrong when thinking about it the first time.
So it's still usable. The point about this riddle is that the number came to your mind, and the number is 10 cents. And everybody, just I think, maybe here, maybe there are exceptions, very few exceptions, people confess that the number 10 cents immediately came to mind. Now, it's wrong. I mean, 10 cents and $1.10 is $1.20, so that's not the solution. The solution is 5 cents. But what is interesting here is that at Princeton, at MIT, at Harvard, and I don't know about Stanford or Caltech, but about 50% of students ask this question of undergraduates say 10 cents. And we learned something very interesting when somebody says 10 cents. We learned that they didn't check. Because if they had checked, they wouldn't say 10 cents. So there is a sense of confidence that people have, that these people in particular have. And it brings us to another function of what I'll call System 2. System 1 is the intuitive one. It performs those automatic and activities. And System 2 is the effortful one, the one that's the deliberate one. And the reason that I classify this as a System 2 operation is that self-control and controlling your attention and deliberate exertion of effort are impaired when by other activities.
Okay, so hopefully this episode was interesting, perhaps a little useful. To me, the real takeaway is that we seem to be able to identify in other people System 1, System 2 thinking and offer up criticisms. But the real objective here is that going forward, we want to try and improve our own System 1, System 2 type thinking, avoid illusions, avoid irrational fears, avoid bias in our own investment making decisions. Okay, next episode, I want to explore a little bit more about price volatility in the public markets. Is this something that we should be avoiding and reducing, or is there an opportunity there for a long-term investor? Thanks for listening. See you next week.
Fred Stupart is managing member at Eaglestone Capital. The opinions expressed in this podcast do not necessarily reflect the opinions of other Eaglestone Capital partners. No information in this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of Eaglestone Capital Partners.